Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast, folks, broadcasting on this fine Sunday, April the 27th. I'm your host, Phil Carroll.
I'm Giles Archer.
Yeah, Charlie, how's tricks?
Yeah, not too bad, not too shabby. Lots of sunny weather, lots of bike rides and enjoying the beach.
Yeah.
And yeah, do you know, you know how like if you exercise a lot, like your body adapts and you get stronger and stronger, you know? And I've been cleared from physiotherapy, so I'm back in the gym a lot at the moment.
Good.
And I reckon this is kind of what it feels like with Trump in charge. It's that, you know, initially it was just crazy and now you're just used to the daily insanity. And the market is getting used to it as well. It's like, oh, the Nasdaq's up 3%. And that's a classic Wednesday, no problem. Whereas a couple of months ago, it was just panic stations every 5 minutes. I think people are just relaxing into it now.
Yeah, I mean, how was your Easter? As you said, you obviously got long weekend there. We got Friday and the Monday off. Did you manage to get some downtime? Because I know you find it quite hard to switch off.
Yeah, no, I pretty much took the full weekend off. I think the thing is, I do work a lot, but there comes a point where you just need to just chill out, recharge, relax, and especially over the Easter weekend, no one bothers.
Yeah. Season 9 already. It's hard to believe we're there, but yeah, I mean, while we were munching on those Easter eggs, and I actually got a Freddo egg, which was amazing. And I couldn't believe how small the little Freddos were in there. But that's another story. The markets were anything but calm. It's, proper tizzy by obviously Trump's tariff saga. I think he's teased a substantial rollback, or what I call a U-turn, of those ridiculously initial eye-watering 145% tariffs, and they probably even higher than that on Chinese goods. If a deal's hammered out, they're obviously not scrapping them entirely, echoed by the US Treasury Secretary Scott Bessent, who called the China standoff unsustainable and expects cooler heads to prevail. So, I mean, the markets have lapped it up, as you said. Global stocks soared. FTSE 100 leaped 1.1% on Wednesday, clawing back, nearly all of its losses from Trump's initial tariff bombshell a few weeks back. And the S&P surged 2.5% on Tuesday. So what do you make of where we are now? I know you said that you feel like we're going to get a reversal back to the 4,500s on the S&P, but what do you make of the current situation?
The current situation, well, the first thing I think is really important to understand is that all of this rise, well, not all of it, but a significant part is retail. The hedge funds are still selling and retail is still buying at kind of record amounts. Because, and my perspective on it is simple, which is that everybody who started investing post 2008 has been conditioned forever to just buy the dip. And if you buy the dip, you'll be rewarded. But, if you look at the Nasdaq, for example, it took, I think, like 7 years or so, to recover after 2008. So you can buy the dip, but you might find you wait a very long time to get back up to previous highs. Meanwhile, are the hedge funds using retail as exit liquidity? I don't know. The problem is that no one actually knows.
No.
The thing is with the tariffs, I thought there'd be a crash this year. I didn't think it would be self-induced by Trump, but there we go.
Yeah.
How do you navigate this beyond, the volatility? If you're not an insider in the White House, you don't really know what's going on. Like currently, Trump is saying, we're currently having discussions with China, and China is saying actually there's no discussions going on at all. You've got Bessent saying, behind closed doors, in a privately, this situation with China is unsustainable. It's going to be tempered down, and then the market leaps on that. The amount of insider trading is crazy. And did you see the Trump meme coin thing as well?
Yeah.
He said the top 220 holders will get a private dinner with him where he'll be discussing the crypto industry. And the meme coin sort of shot up 100%. Basically, the point is that the president is making the US market just completely unreliable. It's not trading on fundamentals at all. And kind of I think it's quite, if you're an AIM investor, you've been doing it for a long time, it's quite fun because you kind of you have an informational advantage, you've trained for this sort of stuff. But if you've never invested in small caps, you don't really understand that, trillions of dollars are being taken away and added to the market capitalizations of the largest companies in the US based on a single person's tweeting. And that it can only lead to disaster, in my opinion, but I guess we'll see.
Yeah, and then obviously on the Fed front, we saw his, he kind of dialed down that feud with JPO. What do you make? Because obviously there was initial threats to kind of sack him after that loser jibe, and then it said on Tuesday, he said he had no intention to give him the boot, but still nudging for these, rate cuts. the market obviously breathed a bit of a sigh of relief, because I think you alluded to the fact that if JPO went, then it could potentially, the markets would hemorrhage. What do you make of that and his relationship? Powell's holding firm, and he's cautioning that tariffs could reignite inflation. What do you make of that whole stance now?
Well, Powell's only got another year left before he goes, and Trump can put his own man in anyway. So the first thing is that's sort of a medium to long term risk, because Powell puts somebody in who cuts interest rates before they should be cut a year from now. Let's say we still have issues going on in a year. That's something the markets are wary of. Basically, though, I think Trump tried to find a way to fire Powell and realized that he didn't have the power. And Powell was practically the only adult in the room who, he was asked 5 months ago, when the threats were first made, can Trump fire you? And he just said, no, not within the law, not permitted within the law. Just like straight stone cold, and I think basically, I think Trump kind of hates him because Powell commands respect, even among people who don't agree with him. They just think this is an adult, this is a capable person. And then beyond that, before Trump came, with the tariffs, yes, you can criticize Powell for the amount of money printing done in the US, but actually he did achieve a soft landing for inflation, which almost everyone thought was impossible. So the man is now going, well, I've got a year left. I'm not going to kowtow to Trump. I'm not going to reduce interest rates, which could destroy my legacy, a very strong legacy. But beyond that, basically, Trump is the one that's put in place the tariffs, which are going to create the inflation.
Yeah.
And therefore, why should Powell have to, respond to those politics? Yeah.
His approval rating now, I was looking at Trump's approval rating, and it's down to 42%. Originally, it was like 3 weeks ago, it was 43% and 47% post his January the 20th inauguration. So obviously there is a sort of growing discontent there amongst some of his voters. The main point is that is starting to, I think you summed it up. You said that we're not really seeing these effects of these tariffs right away. And once people start to see Chinese goods, you mentioned that you're saying that there's been no shipping out of China to the US for like 3 weeks. And a lot of these shipping companies are absolutely been decimated. And the media aren't reporting any of that. Absolutely not.
What?
So what do you make of that? And also, one thing I want to mention is, it feels like Musk has now pretty much gone away from Doge, and like Tesla is trading at 800 billion market cap, right, which is massively down on its highs. It's still like 20% up on, I think, on the year, but ultimately, like it's still valued as the most, the highest valued motor company in the world. I think like Toyota's 225 billion, so it's massively, and they're massive. Toyota have been. So, what do you make of the whole Musk-Trump relationship, as well as also his approval rating?
So, the Musk-Trump relationship, the China thing, the first thing on China is that it can take, anywhere from sort of 3 to 6 weeks for container ships to leave China to reach the US, right? So if analysts who know a lot more than me and specialize in those shipping routes are saying that it'll really start to feel an impact around May the 10th, maybe 11th. You'll start to see, shops won't have things on shelves, right? And then there's things like there's taxes on, coffee or vanilla or cocoa beans, things that you can't grow in the US. And the US is now starting to think about carving exemptions out, presumably because Trump has been told how plants work. I don't know. But you have the people, real kind of like small business owners are obviously starting to feel it, and importers and exporters are feeling it. But, the average American, it's going to be kind of mid-May when it really smacks them in the face if things don't change.
So it'd be interesting to check his ratings in mid-May.
Yeah,
I think if it starts hitting the pocket of your average person, they are going to look for someone to blame, aren't they? Scapegoat.
100%, 100%. Or even just sort of like go back to the pandemic days. You remember how hard it was to find loo roll or eggs, right? Imagine that, but induced by the tariffs. It's not unimaginable that would become a huge problem, not particularly long from now. But obviously, the problem is it could all just be over or even by the time we're recording on Friday, it could be over by Sunday, and then everything's fine. But on the Musk-Trump relationship, I think they're in, they're out, they're in, they're out. I think there's a lot of infighting in the White House for control of Trump's ear, and Trump is, he blows like the wind, so it's very easy to, I don't know, manipulate. It's not the right word, but to control the narrative and get him to flip-flop between what he wants to do. And there's some adults in the room and there's some not adults in the room. And I think Musk has realized he's out of his depth. And then on Tesla, Tesla is massively overvalued, and its earnings were just absolutely awful. But basically, the stock is just a meme stock now. It doesn't
Yeah.
trade on fundamentals at all. There's, this desperation for, the robots for Optimus or for full service driving to, save the company. But the driving, it's behind what's going on in China and has been promised for a decade.
Absolutely, and that's a really good point, because China, the new batteries that we talked about with BYD that can charge, full charge 250 miles in 5 minutes, are completely, leaps and bounds ahead of any technology
Yeah,
that
yeah, yeah.
Tesla's got. And the other thing is, actually, do you know what Tesla needs?
A new CEO maybe. I
Well,
don't know.
well, not only that, but it needs a new model, Charles. The Model 3 and Model Y, which are their two best-selling ones, have only really had like minor sort of facelift changes, and they're
Mm,
quite old and tired. And you've got BYD and all these other Chinese manufacturers, MG, which have got massive model range. So it needs something exciting. Like they need a
yeah.
new model, and like because the Cybertruck and the Model S, they're just like they've been fraught with issues, like
Well,
real bad complications.
it's the Apple problem as well because
Yeah.
Apple had, to be fair, Apple's product quality is very good generally, but when was the last real release of something super I mean, you had the what are they called, the the virtual reality headset. What was it called? I can't remember. The i something. The Apple virtual reality headset. They
Yeah, I
cost
don't know
like
the
three
Apple
thousand
one. I
dollars.
know it's the Oculus Rift or
The, it
Oculus,
doesn't
whatever.
matter, right? I've forgotten what it's called. That's the whole
Yeah,
point. That was
that's
their
it.
major product launch, and it did not. I mean, it's really only, even the latest iPhones. There's no real improvement on the older ones. iPhone sales are up sort of 1% in the past year. Apple is the same problem, is that they don't have any, really groundbreaking innovative products that make you go, I definitely want to buy that upgrade.
So
Um,
apparently the headset was called Apple Vision Pro. I mean, it's
Vision
not
Pro,
exactly. I
yeah,
mean,
yeah.
it doesn't stick, does it? Like Oculus or something like that.
No, no. I mean, to be fair, I mean, my 11-year-old has a Meta Quest 2, which is the Facebook, the Meta Platforms one, and it is really really fun and really enjoyable. But I think the thing is with Apple, with phones, with cars, these are things you use kind of every single day, which are like kind of integral to your life. And Tesla doesn't have a new model that excites anybody, and Apple doesn't have a new iPhone or anything similar that excites anybody.
Mm.
So you're going to have kind of stagnating revenues, and they're going to the growth. I think this is the thing: the growth just isn't there anymore for these
No.
companies. Versus, I suppose, though, the other tech, if you look at Alphabet, for example, and Amazon, I imagine their growth is going to do really well in terms of like the internet space and cloud, for example. But Amazon, again, huge problem. What happens when trade between China and the US stops? What does that do for e-commerce revenue?
Yes.
It's yeah. Who knows? Who knows?
Okay, and then also we saw the sad news that on April the 21st, that Pope Francis died at the age of 88 from heart failure following a stroke and pneumonia, ending a papacy known for humility. His funeral set for Saturday, so it was yesterday, after public viewing in Peter's Basilica, followed by a 9-day mourning period. What do you make? I mean, what did you think of Pope Francis? I mean, obviously, presumably he didn't meet him, but how did he appear? Did he? He was known for his humility. It's hard to think. I mean, I remember the Pope Benedict before, and I think his kind of papacy was almost associated with mired with controversy related to the Catholic Church and things. So let's not dwell too much on that. But he seemed quite a a lot of humility shown. He was always went out. In fact, ironically, he was out, wasn't he, the day before on Easter Saturday in St. Peter's Square, giving his sort of Easter speech and everything like that. And he was meeting people, shaking hands. What do you make of that?
Yeah, well, I think that, a lot of older people, when they come close to the end of their time, they get a burst of energy in their final days. I mean, if you speak to any, my mother-in-law works in a care home, and it seems to be the way it tends to go.
Yeah.
And maybe not just people as well. Anyone who's ever had a dog or a cat will know, the last couple of days, they often have a lot of energy. As far as the Pope and his legacy goes, I don't know. I think the sexual abuse scandals that kind of mired the Catholic Church over the past few decades. He hasn't escaped them, as several of his allies, accused as well. But the Pope is dead. There'll be a new Pope, and I think potentially that's the more interesting question: who the new Pope is going to be. Is it going to be somebody from Africa, for example, which I think
Yeah.
a lot of people are hoping for? Is it going to
Yeah.
be somebody from China potentially? And I think there's still like a billion Catholics, I don't know, and then billions and billions more Christians in the world. The papacy has an extraordinary amount of power. It doesn't feel like it in the UK because, as a general rule, I'd say we're more of an atheist or an agnostic country now than we are Christian. But if you look across, the entire world, the Pope has an extraordinary amount of power, and so there's a huge political dimension attached to whoever, whatever nationality they happen to be when next one is picked. So I guess we'll see.
Yeah, we'll see. We'll look for the white smoke for obviously a new pope, and then the announcement of Habemus Papam from the St. Peter's Basilica. Obviously, once the elected cardinals accept and chooses a papal name, as you say, it'd be interesting. I think it's quite a lengthy process. I remember the last one when prior to Francis, I think when Pope Benedict was elected, it took a long time, and all the cameras just focus on those chimneys, don't they, looking for black smoke, white smoke.
Yeah, black smoke, white smoke. It's
yeah.
Yeah, when really it's a number of old men trying to pick who can they control the most.
And I think a lot of those were actually chosen were very good friends with Francis, weren't they? They're saying there's a large number, like 80% of them were cardinals that were kind of installed under Pope Francis as well. So
Yeah. Yeah, well, I mean, it's the thing. I think this is the thing. Like the church has a huge political dimension, and you want to secure a legacy after you die. What's the way to do that? Is to pack the cardinals with close supporters of your own version of theology.
Yeah.
I guess we'll see. We'll get to see who the Pope is, and then we can talk about it next time.
Yeah. So let's move on to our first guest this week. We're delighted to welcome back Shaun Day, Managing Director of Greatland Gold. Shaun, great to have you back on the roast. How's life treating you?
Yeah, really well, thanks, Phil. And Charles, good to catch up again.
Absolutely. I mean, we were just talking then about the gold at the top of the show. I mean, just give us your thoughts on, obviously, we've seen pretty much maintaining all-time highs. Obviously, it's dropped back a bit from, I think it bust through about 3,400. It tried 3,500, but it's sort of sitting around the $3,300 right now as we record this. What are your thoughts on the performance of gold?
Yeah, look, we're back to where we were at the start of Monday, so it's been a turbulent week, but uneventful in aggregate. But yeah, look, it's a fantastic gold price, and also what I like about it is when there's a little bit of risk off on gold, or what tends to happen is the Aussie dollar falls. So you're seeing Aussie dollar gold, which is really what we're focused on for Greatland at least, is actually a slightly more stable variable of gold as well, and that's north of $5,000 right now Aussie, and that is a remarkably strong price. So bodes well for a good June quarter, I hope.
Absolutely, yeah. I mean, it's been a busy few weeks for Greatland with a series of very strong updates. So let's dive straight into it. Starting with the March quarter results, this was your first full quarter since acquiring 100% of Telfer and Havieron, and the numbers certainly impressed. Gold production came in at over 90,000 ounces and copper at more than 3,500 tonnes, with gold out up 21% and all-in sustaining costs lower than the pre-acquisition plan. Gold recoveries also jumped to 86.8%, well above the previous 78% assumption, and financially it was just as robust. You posted 253 million Oz dollars in free cash flow for the quarter and closed March with 398 million Oz dollars in cash and no debt, which really puts you in a strong position heading into the second half of financial year 25. Sounds like a great set of results, Shaun. Just, how's the integration going, and what stood out most to you from the first full quarter of owning Telfer and Havieron?
Yeah, that was a good summary. It's a lovely set of numbers. The cash balance and what that does from a de-risking point of view is tremendous. What stood out, I think you touched on it, was that the cash generation, and where was that built upon increased gold recoveries and indeed copper recoveries through the mill. Really significant improvements. Now, just for good order, we'll be putting through we're at the top of West Dome again. We're pushing back that pit. We'll do some oxide ore this quarter, which will see that notched down because the oxide ore does get lower recoveries. Still higher recoveries than what you traditionally saw at Telfer from the oxides, but overall oxides are a bit lower. In the underground, the meters we're getting per jumbo, that's the big production drill rigs. We've taken from sub 200 meters to 470 meters in the last quarter in March. So we've more than doubled productivity of gear in that underground. Now that drives a more productive underground. And then in the open pit, you've just seen more volume, slightly lower cost. Again, it's just incremental movements on every level, which add up to a pretty significant difference. And gold price obviously helps. So yeah, look, really good. Integration's gone well. We really want to close off the integration in this June quarter as well. That's really the systems integration. We've really done the physical side of it, and now it's just closing out that systems. So we start our financial year, which is a 30 June year. We really want to go in 1 July on a standalone Greatland platform.
Absolutely, yeah. And you also outlined the updated 2-year outlook for Telfer as well, extending the life of the dual train production through, I think it's financial year 27, which effectively bridges that gap until Havieron starts feeding into the mill. So just give us some idea. I mean, I think you talked about the plan to keep Telfer producing around 280 to 320,000 ounces of gold and 7 to 11,000 tons of copper annually during this period. Just talk us through those numbers.
Yeah, look, really, this was all about closing the perceived gap between Telfer completion and Havieron coming online. Now, we did, when we relisted in London after the buying Telfer Havieron, we did a readmission document, which is equivalent to a prospectus. That had an SRK report in it, which showed a 15-month mine plan. We're obviously doing a new prospectus for the ASX listing in June this year, so that comes out shortly. Now, we didn't want to just show that SRK report with 15 months mine plan, less 7 months of depletion, and people go, oh gosh, that this is coming to a close. So in just 15 weeks, we managed to bring out that updated JORC resource that showed 3.2 million ounces of gold, 155,000 tons, and also I think about 117,000 tons of copper in that. We then followed it up with a reserve that demonstrated this extra 2 years. We only had 4 weeks from that resource to the reserve. You'll see these numbers then flow into that SRK report. By getting that out, you won't have to turn to page 400 of our prospectus and find kind of new information. And effectively, we're able to share that market and just dispel the mind the gap. That no longer applies. And we think at the end of that 2-year period that we shared, we've still got life in West Dome. We've still got very meaningful stockpile tons at surface. So Telfer continues. We'll come out with the updated Havieron feasibility study late this calendar year, or the second half of this calendar year, and then we'll perhaps be able to demonstrate, what a Telfer and Havieron look like beyond that. But so it's just this gradual process of just pushing the mine life bow wave out in front of us.
I guess, when you were when you took over the farm, it's less than a year ago. Really, it's only a few months ago. You possibly weren't expecting there to be very low oil prices, record gold prices. Regardless of what any analyst says, we don't really know whether that's going to continue forever. Is oil going to go lower? Is gold going to hit new record highs? And so at the moment, presumably, we have figures Greatland is making a large amount of money. It may not last forever. So how are you balancing, future needs versus spending commitments now? Because obviously the temptation is we've got loads of cash, we drill everything, explore everywhere. But at the same time, you may want to keep some money back for a rainy day.
Yeah, look, this is about the balance sheet. We've got $398 million in the at bank, no debt. That's a really robust capital position to be in, or balance sheet position to be in, to weather whatever comes our way. Right now, gold price is actually higher than it was last quarter. So far, so good. So we want to take advantage of these times to continue to the production, to continue to build our balance sheet. And we do want to invest in growth during this period. And the more ounces we add, that works for us in good times and bad as well. But also, what have we done? We've also taken out that insurance policy with the options, the put options. This is the right to sell gold. I think our 2026 calendar year options are at 4,200 Aussie. Now, that's over $1,000 out of the money, or lower than current market. But that was cheap insurance to buy. And although $5,200 an ounce is spectacular, $4,200 is still really good. If you have a look at our last quarter, what was it? $2,125.26 all in sustaining cost. So that's, it's a $2,000 margin. Now, costs can change and all the rest, but it certainly positions us really well. So we like to, we're focused on that balance sheet. We think one of our competitive advantages is the strength of that balance sheet, but we've also taken out this protection. And during this time, while we enjoy such strengths, we've accelerated the drive out to West Dome, which is extraordinarily high grade. If that comes through, that West Dome underground, I think it's a really attractive element of the mine through the cycle. And we're investing in the drill bit because the more areas you have, the more flexibility you have in your mine plan, the more you can find those areas that work through any cycle. So we're kind of trying to...
multiple fronts. I mean, Greatland Resources, not Greatland Gold in the future. I mean, it basically, I spoke to you about the tungsten last time, but obviously you've got the gold, you've got the copper. I'm guessing this name change is a strategic focus now. Yes, gold is fantastic, but actually you want to consolidate the whole region and every metal in it. Is that about right?
Oh, look, we're a gold company. Look, I think we're more, if you have a look at the Australian market, that, Northern Star Resources, Straits Resources, I've worked for Security Resources Limited. It's just typically the way companies are named here. I can't think of too many of the peer groups that that have the word gold in the name. It's not meant to flag a strategic change. It's more of the same. Gold is our focus. Yes, we have tungsten. I'm not sure we're necessarily going to become a tungsten miner. We would think about how to value that for shareholders, and there's other ways other than Greatland generating that tungsten to generate cash flow, but that's not our immediate focus. Our immediate focus is to optimize Telfer, deliver Havieron, and yes, look, regional consolidation is important to us, but if you have a look at the region, it's more gold and copper is what you typically find in the Paterson. So it's all consistent with what we currently have. We're not closed to anything that creates value for shareholders, but if we look around right now, the low-hanging fruit is our own gold and copper opportunities.
And then with the ASX listing, I mean, the RNS that came most recently from you guys, surrender of the options, both directors and employee share options in the money. I mean, I don't think I've ever seen this before on AIM.
I think there was a few comments on X lit up saying surrendering options in the money is not an act normally associated with AIM boards, shows their commitment to aligning with ordinary PIs, in my opinion. So there was a lot of what brought you to that decision, Shaun.
Look, it was very much about long-term alignment with shareholders. We're going to the ASX. The ASX does discourage kind of particularly directors holding options because they feel it's more of a short-termism focus. This gives us long-term alignment. I think particularly in the context of delivering Havieron, which is a multi-year build, we like that alignment.
I was going to say, and also 50%, I believe, of the surrendered proceeds are being reinvested in the Greatland shares, which are subject to a 12-month lock-in. What was just talk us through the rationale again behind that? Presumably that, it makes them stickier, they're held, there's less kind of free float.
Yeah, so look, obviously there's some tax effect of kind of effectively selling the options and buying the shares. But tax aside, we're basically reinvesting the bulk of that money into Greatland shares. So as I said, we're going from one form of Greatland securities to another, and that gives us that ongoing alignment, and that's what we really wanted to achieve through this process.
After the ASX listing, obviously this is what everyone's minds are focused on, superannuation funds and everything else that might pile into the stock. But Havieron, the definitive feasibility study, which is coming, what kind of numbers are you hoping for? Is that something you can comment on now, or do you not want to dig a hole for yourself?
Yeah, look.
Sorry.
Well, I think what I can say is we started with a feasibility study of 2.8 million tonnes per annum. We're building all the infrastructure which can actually handle more than that. The bitumen road, which hauls back from Havieron to Telfer. The plant at Telfer is much larger than that. So we've already now flagged to the market that what we've adopted is a 4 million tonne case, maybe even up to 4.5 million tonne case for the development of Havieron, and that's the focus for that feasibility study that will come out in the second half of the year. So we like to think that's going to do really well. The key thing we need to solve for is hauling up from underground more ore. So right now, a single decline will do about 2.8 million tonnes. My sense, and let's wait for the feasibility study to be definitive, but my sense is we'll still start at a 2.8 million tonne Havieron hauling up with trucks from the underground. That's where we'll start. We'll reinvest that cash flow to build a second decline, likely a conveyor, and then a conveyor is good ESG, even better economics because it's an electric haul to surface, and that bulk ore handling system is really attractive, and really attractive as we continue to follow Havieron down, that ore body down to the center of the earth. So it's a really, I think it's the right solution for this sub-vertical high-grade Havieron ore body.
I mean, another question that I had on my mind actually is that, we're talking about the pattern in general and you're consolidating the region. Obviously, there's lots of other companies around with varying exploration. Some have, just putting a drill bit in, others have got resources and reserves. But I guess the question is, in the RNSs recently, Greatland was talking a lot about, potential further value accretive deals, buying potentially other companies out. But then is that preferable when gold is so high at the moment? Or is it better to spend money on exploration? And how are you balancing those two things? Or are you just focusing on what you have at yourself at the moment?
Look, our focus is really on what we have for ourselves at the moment. Being able to add 3 million ounces or 3.2 million ounces plus copper in 15 weeks, being able to then walk that up to a reserve because it's on our mining lease, it's part of our existing facility. Having, I think, the best organic growth profile in the sector with bringing a brownfields, near mine Havieron online to augment Telfer. We get that right. That's where we're going to generate the value for shareholders. We're not adverse to looking at sensible elements to augment that. But where maybe when we came out with a 15-month mine plan, people felt we might need to do something else to augment that. I think now the penny might be dropping for the market that no, just what we have here organically is all that's needed. And look, you can always improve things and we're always open to improvement, but there's no rush.
No, you've built the bridge now, haven't you? You've built the bridge from Telfer to Havieron. And obviously we have to wait for that feasibility study to come out. And this is years and years of gold production. And the other thing is the pattern, for some reason, no matter how well the studies are conducted, no matter, you might say, it has an 8-year or a 10-year or 12-year mine life, it always extends further. Seems to be all the major mines in the region, there's always more gold than what you think originally. You say that's been your experience?
Yeah, well, that's very much the experience, and particularly underground mines, because it's just hard to fully drill out an underground mine from surface. They obviously get deeper, but often, the angle that you can drill them on can be challenging. So that's the attraction of underground mining. These big open pits, you can understand them very early, but subject to gold price, you often have a very good understanding of them from day one. That changes over the decades because gold price and costs and evolve over time. And I think that's part of the opportunity at Telfer. Also, that West Dome is a newer deposit, and that's really where our focus is. But I think going back into Main Dome, which no one's been in, I think, since a $1,450, $1,500 pit shell, I think is a really interesting opportunity for us. But yeah, those undergrounds, you just see as we drill in that underground, there's been mining at Telfer for 40 years in total. And then we're going into a place like the West Dome underground for the first time and seeing some of the best grades seen at Telfer in 20 years. So those undergrounds can throw up some really great and positive surprises. So we love that, and we love what that bodes for in terms of Havieron.
Just going to say, obviously I saw the news that you'll be attending the Greatland Gold Town Hall in London on the May the 6th, and I know it's a sellout event, so anybody hoping to get tickets is going to be a bit disappointed, but I'm sure those listeners and investors who have already got tickets are looking forward to that. Just talk us through the sort of event. I know there's also, I believe, a live webinar that if people haven't got tickets for the live event, they can actually attend that.
Yeah, look, format is normally to do a live webinar beforehand where we go through a live Q&A. So grill me a little bit, but always
so get your questions in. Come on, push him, make him wriggle.
And then the live town hall event. Look, I really appreciate the support we've had in London, and the retail support's a bit special as well with Greatland. So that's something that I want to put back into that same, that same retail enthusiasm that you get for Greatland. It's been a huge part of the Greatland story. So, the town halls are not for everyone, but I actually really enjoy them, and I enjoy the engagement with the share base. And to be honest, people are incredibly engaging and giving of their time as well. So, very pleased to do the same. And yeah, look, people should come down to that town hall. The more the merrier. It's good.
Absolutely. Well, we'll say, Shaun Day, MD of Greatland Gold, we really do appreciate your time coming on the podcast and giving us your insights. So thanks very much for your time, Shaun.
Thanks again. As always, appreciate you guys taking the time to catch up. So thank you.
Let's move on to our second guest this week. We're really pleased to welcome Joe Belladonna, Managing Director of Harena Resources. Joe, welcome to the Sunday Roast. Great to have you with us.
Thanks for having us along, Phil.
Absolutely, yeah. So for our listeners who might not be familiar, Harena Resources is a brand new name to the London market, having recently completed its reverse takeover of Citius Resources and begun trading under the ticker HREE on the main board of the LSE. It's a significant debut and one that's backed by a globally strategic asset. Harena's flagship project is a 75% owned Ampasindava rare earths project in Madagascar, which hosts one of the largest ionic clay rare earth deposits outside China, with a JORC-compliant resource of nearly 700 million tonnes. What makes it stand out is a concentration of critical magnet metals, neodymium, praseodymium, dysprosium and terbium, which are vital for everything from defence applications like fighter jets, missile guidance and radar systems to clean energy technologies, including wind turbines and EV motors. And this news couldn't be more timely. China has recently imposed fresh export controls on key rare earths like dysprosium and terbium, both essential in the production of permanent magnets. It's another clear reminder of the growing urgency for Western nations to establish secure, geopolitically independent supply chains for these critical materials. Harena's Ampasindava project, with its ionic clay geology and low-impact heap leach processing, offers an environmentally friendly and lower-cost path to production, all outside Chinese influence. So, Joe, this is a fascinating story and clearly one that lands at the heart of critical minerals, energy transition and global security. Let's start at the beginning. You've just listed, you've got a massive resource and the world is paying attention. Can you give us the high-level overview of what Harena is building and why now is the time?
Yeah, definitely. The Harena is backed up by the Ampasindava ionic clay rare earth resource. And when we say globally significant, it is a very large scale resource, 606,000 tonnes of rare earth oxides in situ at the project. Importantly, a lot of work has been done. A lot of the baseline geology, baseline metallurgy work has been completed for the project. So where people have got probably 5 to 10 years worth of drilling and assays and metallurgy work to be done, Ampasindava, the work's been done there in the previous years. So this is very much a developer story. And as you said, at the moment, the geopolitical situation around rare earths is super interesting, regardless of, I guess, which sort of camp you're looking at, whether it's China and their supply dominance, whether it's the US or Europe looking for where they're going to get their rare earth elements from to go into their permanent magnets and their industrial applications. Yeah, it really just is showing us that the demand is going to be there, and if people start fighting over these elements, it really is a great time to have a project that is actually development ready, because people aren't looking for where they're getting these elements from in 10 years or 15 years. They want to know where they're getting them from over the next few years. So having a large scale resource, simple processing flow sheet, and the elements that people are actually chasing at the moment is pretty interesting for us.
Absolutely. And as you just alluded there, that you did some, I think, recent MET test work, which confirmed these high recoveries of these, key elements, low acid ammonium sulfate leaching, which is obviously great. And the fact it uses a lesser amount with extraction rates as high as 88%. And then I think there's other thing that caught my attention from the RNS was there was no tailings facility required. Is that right? And the overall process is clean and efficient, which is obviously great for ESG.
Yeah, absolutely. The project itself actually uses like you said, it's a heap leaching process. It's a cyclical, almost a mineral sands style of operation. So we're only mining the top 10 meters of the ionic clays. We're we're stripping some topsoil, putting that to one side. We're mining the clays down to approximately 10 meters, sometimes a little bit deeper, depending on where the resource cuts off. We're trucking that to a centralized heap leach pad where we're using, really low technology risk heap leaching processes. Saline leaching and ammonia sulfate leaching it's not a toxic environment. They're salt-based products. Ammonia sulfate is better known as garden fertilizer colloquially. So it's not like we're using any serious acids or serious reagents in this process. The salt is basically only breaking the ionic bond of the elements off of the clays and releasing them into solution. From there, the solution is then collected up, put through a filtration and a reverse osmosis plant, and from there it's precipitated out into a carbonate product. Anything that's left over, or our main, I guess, waste product is actually fresh water. We use that to wash, clean the heaps, and anything that's left over goes back to to the local community. From there, the clays are put back to where they were mined, and the topsoil is put back over the top of them, and it's like we've not been there. So no need for permanent waste dumps. There's no open pits or underground mines that are left as a legacy post mining, and you're actually almost leaving it in better condition than when you mined it, because the ammonia sulfate being a garden fertilizer, there are some trace elements left behind. Those nutrients are there for rehabilitation or repurposing for farming. So it is a nice clean way of getting your rare earth elements. I mean, look, when we're looking at critical minerals, especially around new energy, people are trying to make a difference to the environment, not leave it in a worse condition than it was. And this is sort of the holy grail of that type of process, where you're leaving the ground exactly as you found it, if not in a better condition. And there's no legacy items left at the end of the day. So those tails dams, they don't exist. They're never there. And even at the very end of the process, and I talk about it being a large scale project, at our current estimated maximum run rate, it would have a 100-year mine life. So even at the end of that, you could still rip and seed the heap leach pads that we used in the process as well. So look, it is really, really novel. It's a super environmentally friendly process, and it's actually what got me interested in Harena in the very beginning, is this process of being able to not only provide the elements going into wind turbines and new energy applications, EV motors, but to be able to do that without some of the sometimes necessary elements of other mining operations.
Sure. Yeah. One other thing that sort of stood out in the RNS was this non-binding offtake agreement, which I believe is already in place with United Rare Earths in the US. That you're sort of building the early foundations of a fully integrated Western-aligned rare earth supply chain. Just talk us through that offtake agreement, please, Joe.
Yeah, sure. So United Rare Earths is a US-based group. Look, they're a private company at the moment. They are reliant on government appropriations to fund their development of their processes, of their processing plant as such. At the moment, they had their groundbreaking ceremony on a patch of land in Tennessee, in the US state of Tennessee. So they're doing a three-pronged approach to their development, which is recycling, separation facilities, and then a refinery. And they'll do that in a cycle way, so that they can be the full value chain of rare earths back into the US, which is, to be able to attract, US interest at this early stage is very, very good for Harena, obviously. But at the moment, it's non-binding. It is a non-binding term sheet. The way to move those term sheets forward now for us would be to do some work on the ground and actually get some product samples, because when you get to that stage, when you've got some of the murk that you can precipitate out, you can actually take that to customers, and then you can do binding agreements and the likes as such. But it's a really good indication that the US is keen to get hold of these products and get it into their manufacturing processes as we head forward. So yeah, it's great. And look, it's 50% of our product at the moment. All of the terms are generally linked to market metrics. There's concepts of take or pay in the term sheet as such. So it's very much a market, at market type agreement, and then we can move that forward at the appropriate time.
I guess building on that, what's the milestones for the next sort of 6 to 12 months or so? Because we're trying to build up the share price, and we're talking about getting some samples out to customers. But what are you kind of looking forward to over the next year?
Yeah, definitely. Look, the majority of our use of funds was earmarked for completion of the transaction, obviously, which we've got done, was to actually move forward our feasibility study work. So we're currently working on a pre-feasibility study that is required to go to the Madagascar government for our mining license to be transitioned from an exploration. Well, it's currently in transition from exploration to a mining license. So that's the key piece of work that needs to be done at the moment. Look, the beauty of having the project and the work that's been done previously is that geology and metallurgy have been completed. So for us, it's about having a mine plan, a cost model, and a logistics plan to complete the pre-feasibility study document. And from there, we can obviously run we can take some cash flow models and the likes into the Madagascar government, and from that point of view, then we can actually have our license transition. So that's the key piece of work that's ongoing at the moment. The other thing we want to look at is, at the moment, we're 75% of the project. We think there might be a pathway to increase that ownership percentage. So that would be another piece of news flow potentially that we can have into the market. And then we also need to move on with our environmental impact assessment as well, which forms part of our overall plan to get into government for that. It's
always those two, isn't it? It's a mining license and the environmental impact assessment. Phil and I have waited on these at other projects, and then they finally land, and suddenly that's the catalyst, right? Like it really is.
Yeah.
And then after that, I guess it's financing and getting some kind of joint venture deal or offtake agreement, or term sheets, whatever it is. I mean, actually, that's a good question. I know it's early days. Well, it's not really early days, actually. But once you get the mining license and environmental clearances, how would you prefer the project be funded? Or are you kind of open to whatever comes your way?
Look, we're definitely wouldn't close ourselves off to any particular avenue or structure as such. So yeah, we would never close ourselves off. Ultimately it will come down to whether off-takers want to be involved. Development banks want to be involved. People like the DFC are funding projects. The export development banks, we've had a chat with some of those guys as well around, like filtration plants and reverse osmosis plants actually come out of Australia. At the moment is probably where they'll come from. So the export development banks could get involved in those sorts of pieces of kit and provide support. Look, governments are certainly looking at where they're going to get their rare earth elements from. Look, I think more likely than not, an offtake party would probably be likely to be involved in a funding solution, I would think. We're certainly seeing interest across all jurisdictions around offtake, whether that's Asia, Europe, or the US. Obviously, we've already got the term sheet, the non-binding term sheet in place with United Rare Earths. So there's certainly the need for people to source material. And at the moment, if you don't want to get that from China or you don't want to process it in China,
or you can't get it from China or Korea now.
Pretty limited options. So, if people want to bring projects on quickly, the best way for them to do that is to get involved in, whether that's prepaid offtakes or the like. Again, the beauty of Ampasindava is it's a simple process. It's free digging, so there's no milling or crushing equipment, no big plant sort of construction.
Almost,
It can be done pretty efficiently with potentially the offtake parties and some development banks getting involved.
If you were, I imagine like most plants are modular now, but if you were to start with, just a very simple, basic open pit, what kind of financing costs are you looking at? I know you have to wait for the feasibility study, but just kind of ballpark figures.
Yeah, look, nice try, but I won't be biting on that one. Obviously it's very difficult to say depending on the size and the style and what you want to do. Look, there's a few analogies out there in the marketplace. There's one or two ionic clays similar to Ampasindava in similar jurisdictions. You can pull up their feasibility studies and have a look at what their capex opex looks like.
And it's not that much. I won't name figures, but surprisingly less than what you might think. Yeah, the only other question was logistics in terms of the actual asset itself is very easy to develop. But in terms of, is there rail, is there road, are there ports nearby? Is it quite easy to, get it out of the country?
Yeah, look, it's actually, we've got quite a strategic advantage at Ampasindava, given that it's actually on the coast. And to the north, we've got a bank of islands where there's international airports and freight ports. And then there's a large container port that's to the north, a bit further north from Ampasindava as well. So, luckily we've got essentially what we would think would be ocean-based logistics as we head forward. Look, Madagascar does have a challenging road network. I won't be quoted on it, but I'm pretty sure it's got very, very limited rail network, if any. So us not needing to build 100 kilometres of road or rail is pretty important. And the other point is that the process itself, given that most of our equipment is containerized type kit, whether it's a generator, a filtration plant, or a reverse osmosis plant, they're coming via sea containers. They're self-contained units, and they're the sorts of things that we can crane on and off of a barge at site, rather than trying to bring it 100 k's from a port somewhere on the road. So that's a real strategic advantage for us. And the other point there is that the saline leach, or the saltwater leach, that is the initial leaching process for the first 2 weeks, is actually seawater. So our major reagent is actually sitting right on our doorstep in the ocean as well. So our location is very lucky.
I think I've heard we haven't got the right reagent to the plant doesn't work many times. The fact that it's seawater is a positive, because you won't be able to use that excuse. You have to come up with another one, because no matter what asset it is, there's always something, isn't there, Phil? It's always something when you start building that goes wrong.
It's funny because you always think of like Madagascar for the nickel, cobalt, and also obviously the vanilla. Madagascar, I think, is the world's largest producer, but I never really thought of rare earths on there, to be honest.
Yeah, well, I'll jump in there. Madagascar has actually got quite a rich mining history in that regard. I mean, Rio Tinto has been there with their QNI, their ilmenite mine for many, many years. So there's some global majors that have been operating in the region for a long period of time. And it's actually with Ambatovi and Sumitomo, or Sherritt back in the day, they've trained a lot of chemists, metallurgists, engineers through that period. And it's a sort of 20, 30-year period they've been operating, and QNI even longer. So there's a pool of people in Madagascar now that are actually been really well trained in these sort of specialised operations as such. And look, Harena won't have anywhere near the complexity of a high pressure acid leaching plant, I can assure you of that. So we're actually sort of get approached by people that are well trained and ready to operate, laboratory facilities and the likes that we'll have. They'll be relatively simple, but they'll be on site and they'll be life of mine facilities that we have there. And so, being able to source local content to fill those positions, I think there's a strong story there for us as well, which again leads into our ESG and our overall philosophy about bringing Madagascar along with us. So it's pretty exciting, the whole thing. It sort of fits together really well.
Very good. Well, I think while you're on the Sunday Roast, Joe, we've got to ask you the famous question. What is your perfect Sunday Roast?
I don't think you can go past a lamb roast, can you?
Completely agree.
And with it being Easter out the way, lamb has been on the menu many a pub in the UK this last couple of weeks. So great choice.
Yeah, nothing like a good lamb leg in the slow cooker, that's for sure.
Absolutely. Well, on that note, we'll say Joe Belladonna, Managing Director of Harena Resources, thanks very much for appearing on the podcast.
Thanks for having us along and giving us the opportunity to explain the Harena story.
So let's have a look at some of the movers and shakers of the week. We've seen the biggest riser I can see on SharePad is Fragrant Prosperity FPP Holdings. They're up some 400% after appointing fintech veteran David Brown to the newly formed Investment Advisory Board, a strategic move as the company accelerates its search for transformative AI-driven fintech acquisition. Brown brings over 2 decades of experience in scaling financial technology ventures, including founding Provise and Oxygen Finance, 2 early pioneers in applying AI and early payment models. Joining existing advisors Simon Retter and Richard Samuel, Brown will support FPP's acquisition strategy with a focus on identifying fintech targets, leveraging AI. So looks good on that one. A lot of these sort of little stocks moving that you kind of like forgotten about. I remember hearing them back a while, and I think a lot of retail investors were quite heavy on this, and they moved up significantly. Another one we talked about was CPAI, wasn't it, which has done something like 1,200%. It's the best mover of the year. So what do you make of these movements, and when they sort of install someone on the board, David Brown, we saw Rangam Jan or whatever, Rangam Naj or whatever, the gentleman who's joined these CPAI. I mean, what do you make of these appointments?
Yeah, so I think obviously it's all very exciting when somebody, from a large established multi-billion-dollar or parent company comes on board, and everyone gets very excited, and they should get very excited because they don't tend to take positions, just for no reason at all. And yet, what I've tended to find is that when a company does bring on board like a big heavy hitter, it doesn't mean they're going to stay forever, or that it's going to translate into massive returns. But obviously, if you want to take a speculative position, then go for it. Go for it. I mean, I can't remember the name of the company. There was one that took on 3 ex-Tesla executives. Was that last year? And then it kind of shot up, and then it came back down again. And I suspect, sometimes that's the way it goes. Other times they're going to make this new company their baby, and you'll make loads and loads of money off it. But as a general rule, the very best, from the public companies, they tend to start with their own private companies and then go public themselves rather than come into something old. So I'm always worried about it when it does happen. And, having said that, it makes your money. And when you've got a market cap of sort of like 1-2 million, it goes up to sort of 6-7 million off the back of it, then fantastic news. But I tend to find that when it does happen, those companies then raised money in the market to take advantage of the increased share price. So
absolutely.
Yeah.
The other one that came, there's a late RNS on Friday, or sort of late morning, was BSF Enterprise. They announced that their wholly owned subsidiary Lab-Grown Leather, LGL, is transitioning its lab-grown leather technology from lab scale to future products in a major step forward. And basically they're looking at this T-Rex leather. It was a bit of a shock. It came as a bit of a shock, and probably the same to you. I was like, what is this? Is it? I had to check the date. Was it at April Fool's? Genuinely was shocked that this is. I mean, it sounds absolutely game changing. I think to sum it up, there's a team of scientists and bioengineers, working to create this luxury leather material from that lab engineered Tyrannosaurus rex skin, using what is effectively an ancient protein fragments found in fossils. I mean, this sounds very much, as we said, didn't we, Charles? It's very much
Jurassic
Jurassic
Park.
Park
Yeah,
feeling.
yeah.
It's like, so without obviously access to full T-Rex DNA, the team is effectively reconstructing the collagen, which is obviously the main component of the leather, they're filling the gaps with this AI technology and inserting the resulting genetic code into these living cells. And obviously the goal of this is to produce what will be a high-end sustainable alternative to traditional leathers for items like handbags, wallets, with potential for broader applications. Imagine buying your Aston Martin and inside it you've got T-Rex leather hide. I mean, it's just T-Rex hide Aston. It's mind-boggling. But so the initial cost will be extremely high, but the technology could eventually offer a more ethical and durable material for mainstream use. So what are your thoughts initially? Wow, are mine. And also, do you think there's an application, and what sort of customer do you think will be buying this?
Okay, well, there's going to be very high-end customers who can afford the price point, because initially, whatever it, however much you make, it's going to be very expensive until you scale, and even when you scale, it will be pricey.
Yeah.
But especially in the world of high fashion, and I'm not a high fashion person, but unique, exclusive, different people pay for those kind of things. And also, it's the deal has been signed with two companies, but one of them is a subsidiary of WPP, which is a £6 billion titan. So you've got a massive amount of financial capital going into this. And we don't actually have the information in the RNS, but presumably it's going to be at least part funded by these partners, simply because BSF doesn't have the capital to do it themselves. So, and then the other thing, obviously, is the question that if it does work, and then and they're very happy with it, do they then go, right, we just want to buy out the patents from you? And given how low the market cap is, even after what's it up like 200% or whatever it is.
Yeah, absolutely.
It is a hugely changing RNS. And I remember when we talked to Che 6 months, a year ago, whenever it was. I mean, and I was saying that the replacement meat market is kind of died out and it's not going to come back till interest rates come back down. And so they've pivoted towards the leather, and it seems to have made a huge difference. Even though the market cap hasn't appreciated it yet, they're now in a growth sector, and there is a real possibility they make a lot of money. Obviously, the flip side of that is, keeping the lights on and working capital and all those things. But after this announcement, one hopes that there'll be, some kind of deal worked out. And one key thing in the RNS that I did notice is they say they want to get the first product out by the end of the year.
Yes.
So obviously
it is interesting because, as you just said, it's backed by VML. They're a big branding agency, and some of their clients include the likes of AstraZeneca, Microsoft, and Nestle. Their chief creative officer came out in a statement. There's actually a Times article that went out on Friday, and he basically said, well, we do think that a lot of people will be excited by the idea of carrying a beautiful T-Rex leather handbag, wallet, or belt. Its usage potential stretches far beyond the fashion and luxury sectors. I mean, it's game changing in that, and they're going to back 66 million years to redefine what consumers expect from leather. So they're going back 66 million years I mean, they are redefining it there, aren't they? It does, I think once the wider market gets this, it could be
it could be explosive. I think basically you want to sort out sort of the shorter term funding issues. There's a bit of cash in the company still from the last raise, so I don't think that's sort of an immediate near-term issue. But it's the fact that you're going to have, they've already done all the science, or most of the science on it over the years. So it's the fact you're going to have products ready to launch and ready to go in Q4, which is, we're in Q2 now. So it's really not that long away. Quite exciting.
And it's exciting. And we'll get Che and Jeff on a podcast next week and really drill down into this news. I worry that they will create Jurassic Park, though, because there's literally we're going to fill in the gaps. With other animal DNA. Exactly, they fill the gaps. I mean, we all looked at that movie and thought, kind of like, it's almost believable, but like it's twisting that, I think it was Michael Crichton who wrote the original book. I might be wrong on that. But anyway, you look at it and think that could not happen. But actually what they're doing here is potentially, it's like it's bringing Hollywood to reality almost.
Almost. Whatever it is, it's exciting. And for long-term shareholders, it's kind of a light in the tunnel. I mean, we quite a few light in the tunnels this week, actually, haven't there? There's been the vast resources diamonds. The prophecy is fulfilled.
I
2 years
genuinely, I
later.
need your input on this. It's one of my favourite talking, points is PREM, lovely Premier Africa. They finished the week around 20%, but obviously they were up much higher on the news. Do you want to just talk us through this non-binding letter of interest with Glencore regarding this potential purchase of spodumene?
Well, I think basically Glencore over the past few months, I mean, they've been going around various kind of small or even medium scale lithium operations, offering to kind of get in there while the lithium market is horrendously depressed. And PREM's, managed to get a non-binding letter of intent. So it's non-binding, but basically the deal is if George can get the plant to work within the next 3 months, Glencore will come in with capital to help out the company and also to pay off, Camax, the debtor of the offtake prepayment. So, but obviously, he's used this information to get another placing away, which, classic George. But another 1.5 million, and then the race is on. It feels like the final countdown. And every time you feel like it's the final countdown, it's not. It's like that meme of like the truck nearly hitting the post, and it just almost hits and then it just resets. I think, like, for me, the key thing is, Camax having built the plant, the Chinese won't particularly enjoy the idea of a Western operator coming in and taking over, having themselves suffered for years. They won't want that to happen. So it might make the Camax play ball. But at the end of the day, PREM's cash position is still very precarious even after the raise. The letter is non-binding. It might come to nothing. But at the same time, it is Glencore, which is a FTSE 100 titan. And then the other thing is, I think most rational shareholders were looking at this, at the project saying, well, the plant's not working, lithium price is depressed, the company doesn't have any money. It is, a lifeboat. So just take it with both hands. And if he does manage to pull it off and get Glencore on board and pay off the Camax debt and get the plant working and lithium pricing comes back up, as most analysts expect over the next sort of 12, 18 months, then it would be a fairy tale ending. But I will caveat that with there is a massive amount of risk still. And the other thing is Glencore Glencore are ruthless. So they will, push for the best deal on there as possible.
Sure.
But I guess we'll see.
Yeah, it'd be interesting one. I mean, it does feel like maybe things are starting to turn around a bit there. I mean, as you say, it'd be interesting to see. He's got the funding away now as well, which is another sort of, Right, so Vast Resources. This is another one that it's probably a bit of a Marmite share. It's a lot of retailers love it, but a lot of retailers hate it. But they had an announcement on Friday which stated that there was the release of the historical diamond parcel, and I was just doing a bit of research on this, and some gentleman by the name of Charlie Archer wrote an article back in 2023 on investing strategy. I had to double take. I was like, who wrote? You said to me, who wrote that then? And I looked at it. So basically, there's back in the day, or back in 2023, a couple of years ago, there was potentially a valuation of around about $300 per carat, which would potential value the parcel at approximately $38.8 million. But the market's sort of cooled off a bit now for diamonds, and I think we talked about this with a company called Gem Resources, which had dropped back. But what do you make of that news? Is this a game changer for Vast?
Well, I think in terms of sentiment, it's a game changer because what it says is, we said these are our diamonds, these are our diamonds, these are our diamonds, and now they're finally being released. I think the other kind of like really maybe important point to make beyond Vast is that Zimbabwe wants to attract both Western and Chinese investment. Geopolitically, the fight for critical minerals is really strong. So by releasing diamonds and basically being like a safe jurisdiction that respects the rule of law, they're going to attract more investment into the country. So this kind of timing is kind of, it's not suspect, but it's going to help the country out a lot. In terms of the valuation for diamonds, I imagine they're worth less now because the diamond market's come off a lot over the past couple of years.
Yes.
But it's actually very high quality carats can go for a lot more money. Low quality carats can go for a lot less. It's actually very difficult to know how much money they might get for these diamonds. And the range of it could be very, very high. But then obviously Vast market cap. I mean, the share absolutely rocketed in the morning of the announcement, and then it's come back down to basically flat. The market cap is around 11, 12 million pounds.
But they're 75% up on the week, so it's not...
on the way, yeah. Yeah, so who knew?
yeah, exactly. I mean, it's interesting. I mean, Andrew Prellier gets quite a lot of stick on the boards from what I can see. Okay, but if you look at his comment on the recent RNS related to this diamond parcel, He said, after personally spending more than one of the past 4 years in Zimbabwe to facilitate the release of the historical diamond parcel, I would like to give special thanks to. Would you say that that is, I mean, that seems, he's obviously putting a lot of work and a lot of effort into this. And,
Well,
you know, you've got to give him some credit for that, to spend
he made
1 out of 4.
He made a personal loan to the company as well. I think it was in January. Well, basically, it became kind of clear that the creditors wanted their money. He said, right, fine, I'll put my own money into this. I'll put my own skin in the game. So yeah, I will give him, you know, significant credit for it. And I do think as well, kind of in the background, that other operations are looking pretty reasonable as well.
I was going to ask you a little bit about those, because there was an operational update that coincided or similar time of release to the diamond parcel, where they went through kind of their operational update on the mines in Romania and Tajikistan, and a couple of them stood out. You know, the bite apply, obviously the polymetallic mine, continuous drilling and reprofiling the underground asset. There was obviously an update on Manila, the polymetallic mine there, the former Haynes gold mine. So it does seem, and pardon the pun, but they do have vast resources by the looks of things. All right, not all of them are 100% owned, and quite a few are sort of 29% interest, 4.9%. But do you think they've got a good portfolio of assets there?
The assets have always been reasonable. I think the bigger question is, you know, with the market cap currently around 11-12 million pounds, it's no secret that Vast is pretty much out of money, unless they get some kind of external financing, and they owe creditors as well.
Yeah.
So the question is, how much money will they get for the diamonds?
Yeah.
Because, for example, if it's a few million pounds, they can pay off all their creditors and go, you know, then suddenly the investment case becomes very strong. If it's a lot of millions of pounds, then they can pay off all their creditors and have working capital and still have more money than the market cap, then everything's gravy.
Yes.
But the basic thing is, you don't know how much money I'm trying to think of the words. You don't know how much money the diamonds are going to be, and you don't know whether there might be a placing on the way, you know, in the interim before they can sell them off. So it's, you know,
I mean, even if they've, you know, if you said they were around 300 roughly back then, and they're only half of that now, 150 or even $100, then there's still a good wedge, maybe 12-13 million dollars.
Well, exactly, but then you do have the 20% costs as well, they've noted.
Yeah.
But basically, it's the other question is, you know, how quickly can they sell them? Who are they going to sell them to? They already have an intended buyer, X, Y, and Z. But I think basically, you know, I think for Andrew, but also if, you know, shareholders who have been in it for a very long time, I'm trying to think of the word. I mean, no one deserves profits in any market, but if you've been holding those shares or you've been buying them when they're low and supporting the company and supporting Andrew, I do think you do deserve that win. I think it's you know, having suffered for a couple of years, it's really nice to see. That's what it is. It's nice to see winners.
How do you play these things in terms of, if you've been a long-suffering holder, you've seen constant dilution, you've seen the share price decimated, and then you get a glimmer of hope and a 400%, 500% rise? Do you then take some of that original, you know, the money out, or do you then think, oh, I'm going to hold on for the end game? Do you know what I mean? Like it's a sort of, I don't know.
We've all got shares in the bottom drawer that we thought would do really well, then for whatever reason they didn't, and then you just go, well, there's no point selling them because I'll make very little, you know, I'll get very little money out of the company anyway, and there's no liquidity. And then, you know, and then for whatever reason, that, like another one like Finu Bank, right? So I did an article on them a couple of years ago, back when I thought they get the banking license, and it all kind of just went down the pan for a couple of years, and then it shot back up, and I sold out, and I was like, I've made my money back. In this particular case, I've let, you know, it didn't work out for me. Will I regret that in the future? I don't know. Maybe they're going to, you know, do exactly what I originally thought they would. When it comes to this, one of the big problems we have with the AIM market in general, especially with junior resources, that when a stock pumps, you know, 100%, 200%, 300%, everybody knows at some point traders are going to, you just say traders, somebody's going to start selling, and then that selling liquidity pushes the share price down really quickly. So if it's not you who starts selling, someone else is going to be. So it's almost like a prisoner's dilemma. At some point, you know, you have to get out with your profits. And I guess Vast is a good example, because it shot up in the morning and it came back down to, you know, I imagine it'll close the day flat.
Let's move our focuses now to Greenland, and obviously the couple of stocks we talked about in the past. The GreenRock Strategic Materials highlighted significant progress at the Ampasindava graphite project in Greenland on their latest RNS, which was the final results for the year. Strong battery test results using the Ampasindava graphite, expanded exploration licensing, and a $3.5 million LOI from US Exim Bank. A PFS study valued the planned AAM plant at a pre-tax NPV of up to $942 million with a 35.4% IRR. What do you make of that? I mean, obviously, it's great. It's good to see the results all condensed into one RNS. They've also got the post-year end. They signed an MOU with Morrow Batteries and they received an LOI from Denmark's EIFO, which raised £735,000 in funding. And then there was also the BB ESG rating from Digby as well. So what do you make of that stock? And also, I want you to add a little bit of colour on AMITSOC as well.
Yeah,
Sorry,
well,
I want you to add a bit of colour on AMRQ.
Yeah, so I mean, there's a few things here. I mean, the first thing is that Stefan, who I believe you've spoken to in the past. I mean, I've had a few chats with him over the years, and as a CEO, I mean, you couldn't ask for someone better. He's put a lot of his own money in. He's put his own skin in the game. He spends his whole life on this company, and he deserves to succeed. Obviously, in business, deserve, and I just said the word deserve. No one deserves. It's what the market decides. But you couldn't ask him to do more. And it's the fact that GreenRock's flagship asset has been selected for EU critical status. Obviously, that was a really big boon. And then it's the fact that Greenland is so in focus as well in terms of the world critical minerals trade. So we had a headline out from the US yesterday, basically, saying that Trump is aiming to fight China's control of minerals by investing in miners. And then his rhetoric around kind of taking Greenland, taking Canada. I don't expect that the US is going to invade or take Greenland by force anytime soon. But I do think that, there's very few kind of like actual mines or like assets that can be properly kind of exploited out there. And AMRQ, which is GreenRock's neighbor, pretty much immediate neighbor with Nanonet gold mine. And they pretty much are the Greenland frontier. They could have the largest exploration package. They have the most amount of capital behind them. They've got a producing gold mine now, from which we're going to get first production figures, which they're optimizing, which is probably by the end of the year, when it's fully optimized and fully ready to go, you're going to generate a significant amount of free cash flow every year. But basically, you have this situation where companies like AMRQ, or on the smaller scale, GreenRock, and the other little explorers out there, they are kind of right in the middle of Europe and America in a world where China has decided, well, you're not having any more rare earths, and Greenland is just filled with rare earths. China said no more graphite.
We know it is because Vance has been there and Trump Jr. So we know it is.
Of course. Oh, it's like the critical minerals deal, right? This is making me laugh. I'm not sure anyone's explained it to Vance or Trump, but like the critical minerals deal for Ukraine, right? So Putin wants to freeze the borders along the current lines, and all of the metals and minerals in Ukraine pretty much are going to be within Russian-controlled territory. So I'm not sure what they're planning on getting from Ukraine from this deal. But yeah, I mean, Greenland, obviously, it's strategically important because, with global warming, you need the island of Greenland is whoever controls it will have a huge amount of geopolitical control, in the Northern Hemisphere. So the US needs to have that control, not just the critical minerals, but, for military reasons as well. And one military base is enough for them, I suspect. But basically, when you look at GreenRock or AMRQ or, the others out there, AMRQ is the largest, has got the most amount of power in terms of financially and expertise. But companies like GreenRock that are there with that graphite mine, it'll almost certainly at some point get developed because you need X sources of graphite. And yes, for example, there's sovereign metals in Malawi or Blenco, just kind of next door in Africa. But it's the fact that it's in Greenland, the asset is right there, right next to America. And for the US, it feels, safer. And we're in a world where supply chains are, kind of breaking down all the time. You want to have that kind of that visibility over your assets. And in particular, I guess, because we're kind of almost I'd venture that we're in a new Cold War with China, minus the fighting, or at least the US is. And therefore, having access to metals in case that war goes hot, which I really, really hope it doesn't, is actually become mission critical for the US, I would guess.
Very good, very good. Any others, Charles, on your radar this week? There's
a couple. There's always you talk about it forever, couldn't you? But I think there's a couple I want to mention is that AsiaMet just got its power study out, so we're going to get the optimized feasibility study very soon, and then for the love of God, project level financing, and all our dreams come true. I think it's going to come this year, and I think it's going to be transformational. So I'm waiting for that, fingers crossed, just hoping. And then the other one is Harena Resources / Alphamin. I mean, we were talking to Rick Rule, and I bought that Alphamin dip, and I'm very happy I did. So we've now got a ceasefire in the DRC, leading up presumably to a peace. I mean, sadly enough, I suspect the only reason why we've got this is because of the earthquake in Myanmar, which kind of compromised the world's tin operations. And so the world went, hang on, no, we can't have this fighting in the DRC. So it's been stopped pretty much by the Middle East and by China. But, it's been a humanitarian disaster, but hopefully we can get a lasting peace there, or at least a temporary one. Rome shares, rose a little bit, but it's kind of a bit frustrating on the AIM market that stocks always come down on bad news. It takes a lot longer to go up on good news. But those two, I think, will be in for a good run shortly. And
so
then,
basically, their operation, they're gonna prepare to mobilize and commence drilling operations within the
we've got some essays coming out that they can come and go drill again, and everything's kind of a lot better. And then finally, I guess the last thing I would note is Zambia. Obviously, you've got the Colin Bird portfolio, so African Pioneer, Extract, etc., etc. You've also got ARC Minerals out there. Basically, we're coming to the end, or pretty much the rainy seasons have ended. So we're hoping for a lot of news flow from the Zambian quarter. But, it feels like, a lot of these companies we've been waiting for a while. So, fingers crossed that when the news flow comes out, it's going to be good.
Yeah, no, it's been a great show. Great to have Shaun on and Joe on as well. Two very different companies there. Anything else on the radar this week? You talked briefly about TV, about Utopia. Just give us a brief. I fancy it, but just give me a little synopsis on it.
I say it's been on for a few years, but it's an Australian political comedy show, and it's funny because it kind of you think there's a few things which are like Aussie specific, but there's a lot of it is just the Western world just encapsulated. And there's a particular scene where the Australian military and the politicians are saying we need to like change our military strategies because we need to protect our trade routes. And obviously, all the Australian trade routes, their largest trading partner is China, and they're trying to protect their trade routes going to China from China. And it's the kind of the absolute just madness that we kind of have in the political world. And the way they talk about the housing market, for example, the same everywhere. The way they talk about the incompetence of politicians, it's the same everywhere. And it's kind of a bit sad actually, because kind of you laugh, and then after a while you go, actually this is reality.
Yeah.
But I find it funny. I'm sure others will too.
Yeah, I've been watching. There's been a couple of really good TV programs on this last week. One's on Netflix, and funnily enough, it's a Guy Ritchie documentary based on an actual event that happened. It's the Diamond Heist, which was a very audacious heist that happened in 2000. It was at the Millennium Dome, where a gang of thieves tried to steal the Millennium Diamond, or the carat, which is one of De Beers. It's one of the biggest stones ever made. I don't know if you remember, but they drove a JCB through the side of the Millennium Dome, but the flying squad were like one step ahead of them and everything. It was phenomenal. It's a brilliant 3-part Guy Ritchie documentary, so have a look at that on Netflix. And the other one is actually a new Guy Ritchie drama series called Mobland, which is on Paramount, which is got Helen Mirren in, Pierce Brosnan, and Tom Hardy's the lead character. And it is you forget how gritty and great Guy Ritchie is when he starts doing gangster stuff like Layer Cake and Lock, Stock and Two Smoking. I don't know if you ever liked those movies.
Yeah. Layer Cake, classic.
But if you
classic.
love Layer Cake, if you love your proper Guy
Well,
Ritchie,
come on, that got
look at Brad Pitt in Snatch as an Irish gangster.
Yeah.
But the only thing that lets it down, Charles, is Pierce Brosnan's Irish accent is awful. Like, I don't know how. I think he's part Irish anyway. So how is he so awful with his accent?
Don't know, but I think sometimes a hammy awful accent it makes things a little better. And I can't not love Pierce Brosnan and everything. So. Yeah. So it's funny, he got interviewed actually quite recently. They asked him whether he would come back and play like an older Bond for like one film, and he was quite open to it, quite receptive. But I think that could be, in my mind, Bond's like, I didn't like when Daniel Craig and they were like, oh, he's older and he gets hurt. Well, no, Bond should be able to fall out of a helicopter, drop 2 miles onto concrete, just roll it off, and be fine. I do quite like the idea of Pierce Brosnan coming back, just doing one older. Sort of like old man. It requires to use his intelligence and not his fists. I think it'd be quite interesting.
Absolutely. Good. Well, I think anything else you want to talk about? You got anything, what you're looking forward to this next week?
This next week, what am I looking forward to? I don't know, really. I think basically in terms of the markets, we just what I want in kind of like the larger cap world is for the tariff situation, because markets just want certainty and we have no idea what's going on. So basically I want Trump. And basically, the US and China, I said basically multiple times, the US and China just need to hammer out. Basically, the US needs to decide what they want from China, and China needs to decide what they want to concede or not. And then once we have just, a baseline, this is what we're doing from now on, the world will become a much easier place and the markets can recover, or at the very least become more sustainable. And then in the small cap world, all of these companies doing like 100, 200, 300% days, it kind of, I think we're coming back to the bull market. I really do. Or at the very least, the casino market, which will be quite fun. Good.
Very, very good. Well, on that note, we'll say thanks for listening. If you do like what you've heard, please do subscribe and hit the bell icon for further notifications of future episodes, and have a great weekend all.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of the Sunday Roast, please email admin@thesundayroast.net.